In business news, the World Bank in its latest report is projecting that growth will rebound in African economies from 2.6% in 2023 to 3.4% in 2024 and 3.8% in 2025. The new report is contained in the bank statement in its latest African Pulse report released earlier today. Report said increased private consumption and declining inflation were support an economic rebound in Sub-Saharan Africa. It, however, said the recovery remained fragile due to uncertain global economic conditions, growing debt service obligations, frequent natural disasters, and escalating conflicts and violence. The report highlighted that external sources to meet gross financing needs of African governments were shrinking. Those available were costlier than they were before the pandemic. While the federal government of Nigeria has been actively pursuing economic reforms aimed at improving the business environment and fostering sustainable growth. Notable among these reforms are removal of subsidy, foreign exchange liberalization, among others. President of the Lagos Chamber of Commerce and Industry, Mr. Gabriel Idahosa, on our flagship business program earlier today, Business Nigeria, bared his mind on some of these reforms instituted by the new administration.
Each of the policy reforms have their impact, whether it's the removal of fuel subsidy, the conversions of the foreign currency, and then specific removals of various charges like or removal of subsidies in areas like power that we are beginning to see. Across the board, the impact is usually to increase the cost of doing business, whether it is the PMS, the petrol that was used by the drivers and the vehicles that all our businesses use, or the generators that are also used by some of the companies and are fueled by petrol. Across the board, the intention is understood. We know that it will take some time for the benefits to start to flow in. We are beginning to see the benefits in the foreign exchange markets. We are beginning to see the benefits in the public transportation space, but we are beginning to see the benefits of those policy reforms. It's early days in terms of the benefits. We all expected that it would take about 1 year, between 9 months or 1 year, for us to see those benefits.
In a bid to boost economic cooperation and drive intra-African trade within the continent, experts are calling for strategic collaboration and concerted efforts to overcome barriers impeding trade activities among African nations. As experts made the call on the sidelines of the Angola-Nigeria Business Council meeting, which held recently in Lagos. According to them, this call underscores the potential for significant economic growth and development through enhanced intra-African trade.
How does Africa trade with Africa? Simple. We look at Nigeria and Ghana for an example, and we say, okay, Ghana, what are you importing from the rest of the world that we, Nigeria, can supply you? So we take their figures, we take what they're doing, and we bring it back to us, and we wrap up production and productivity in those sectors, and then we export, we drive it into Ghana. We're not going by ship, we're just driving those products into Ghana. So that's the way to look at it for every country.
One of the major challenges is this coastal ship movement of goods from one country to another. And then this is one of the challenges we are trying to really face, and then to try as much as possible to resolve. So both councils, DRC, Nigeria Business Council, and also Angola, Nigeria Business, we are really trying to look into this challenge and make sure that we form a formidable company that can really solve this problem. Another major challenge has to do with free movement of investors.
The government's effort to promote investment in the oil and gas sector have driven the need to address the country's revenue crisis and stabilize the economy. Again, earlier today, partner energy and chemicals leader Deloitte Africa, Mr. Olumide Esan, speaks on the executive orders just instituted by President Bola Ahmed Tinubu.
This is trying to address the end-to-end problem of the industry. One is the cost issue, which we know partly had to do with things like insecurity. Government is working on that, but also had to do with the way we contract in Nigeria, including the NPCL model, but also the NCDMB. And this is what is being tackled already by government. On the other hand, so say, well, if we still have inadequacies systemic issues to deal with, yeah, maybe we can compensate for that by way of, fiscal incentives, by way of, gas tax credits, by way of gas tax allowances. And what that does essentially is to say, well, look, when you run the numbers, country A, country B, country C, and you put Nigeria there, if the returns in Nigeria is better, investors will come to Nigeria. So I believe this will yield the result. Everybody is now looking up to government for implementation. Okay, I believe that this will be implemented to later. And I know government has said that they are committed to this, and we want to see it happen. This way, we can earn. We're producing maybe about 1.6 million barrels now. But if you look at what we can do also from a gas perspective, to expand the scope for gas, we would earn a lot more money, and we will not just rely on, for example, LNG alone, but we have several other floating LNG, several other midstream companies, pipelines companies, that are able to bring resources into Nigeria.
Global shares were mixed today ahead of this week's U.S. inflation figures and European central banks meeting, while industrial metals prices extended recent gains on expectations of a worldwide manufacturing rebound. The pan-European stock 600 index fell 0.1% in early trade, while futures on Wall Street were muted. Expectations for U.S. rate cuts have been receding this year on the back of robust economic data and sticky inflation readings. German 10-year bond yield dipped 2.4% after touching the 3-week high of 2.45% the day before, while the euro held firm at $1.08. MSCI's broadest index of Asian Pacific shares outside Japan increased 0.6%, while Japan's Nikkei rose by 1.1%. Turkey has restricted exports of a wide range of products to Israel until a ceasefire is declared in Gaza. This is Turkey's first significant measure against Israel after 6 months of war. Israel has, however, responded, saying it would respond to the measure, which includes curbing export of steel, fertilizer, and jet fuel with its restrictions on products from Turkey. Turkey has denounced Israel for its campaign on Gaza, which was launched following the Palestinian militant group Hamas in October 7 rampage. And finally, crude oil prices are mixed today. U.S. West Texas Intermediate crude is down and is up 0.25%, selling at $86.65. Brent is up 0.28%, selling at $90.63. Bonny Light is down 1.66%, selling at $92.38. And OPEC basket is up 1.72%, selling at $91.12.